Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Allied Group Interim Report. Allied Group Limited offers a diverse range of businesses and services across various sectors. The company's key segments include investment and finance, investment activities, mortgage loan financing, term loan financing, consumer finance, consumer SME, and other financing products, property development and sale, property investment, property rental, hotel operations managed by third parties, property management, cleaning, security guarding services, elderly care services, and related business operations, healthcare services, hospital operations, additional services, plus securities trading, plus money lending, plus management and consultancy, plus real estate agency, plus corporate and building management and maintenance, plus medical equipment, supplies distribution, plus storage, divanning, freight forwarder services. The significant increase in Allied Group's stock price over the past year can be attributed to several key developments. The listing on the New York Stock Exchange, NYSE, has broadened the investor base, improved trading liquidity, and enhanced research coverage from U.S. investment banks. Strong financial performance, with revenue growth of 31.78% and an impressive EBITDA of $251.19 million, has also contributed to the rise. The nearing completion of the Kurmuk mine is expected to be a significant catalyst, producing 240,000 ounces of gold annually at a low all-in sustaining cash cost of $950 per ounce. Additionally, positive production guidance and insider confidence have signaled management's faith in the company's long-term prospects. Large institutional investments have also indicated strong confidence in Allied Gold Corp's potential. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth is primarily driven by the sales of completed properties, elderly care services, and net investment income. Additionally, the property investment segment and healthcare services segment have also contributed to revenue growth. Furthermore, increases in the fair value of unlisted preferred shares and equity securities have also positively impacted revenue. On the other hand, revenue decline is primarily driven by a decrease in interest, income on loans and advances, hospital fees and charges, and a decline in the property development segment. Decreases in the fair value of unlisted preferred shares, loans receivable, and unlisted equity securities outside Hong Kong have also contributed to revenue decline. Overall, these key areas highlight the main drivers of revenue growth or decline for the company. Net income and profit margin changes. A significant improvement in 2025, the company's net income experienced a substantial increase from $75.4 million in 2024 to $187 million. This significant growth can be attributed to the improvement in profit margins, particularly in the investment management business. The pre-tax profit of this segment rose dramatically from a loss of $147.5 million to a gain of $785.6 million. These changes indicate a notable shift towards profitability and financial stability for the company. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the provided summary, the company is indeed producing positive operating cash flow, which suggests that it has sufficient liquidity to meet its financial obligations and invest in growth initiatives. This is further reinforced by the explicit statement on page 51, confirming the company's operating cash flow status as positive. The company's debt level has undergone significant changes in recent periods. Notably, total borrowings have decreased by $425.2 million, with bank loans decreasing by $185.1 million, and other borrowings by $73 million. Additionally, notes payable have also seen a decline of $167.1 million. Furthermore, interest expenses related to lease liabilities have decreased from $9.7 million to $7 million. These changes indicate a reduction in the company's debt burden and associated interest expenses. The company's financial performance varied across different segments. Notably, the corporate, investment and finance, property development, and healthcare services sectors demonstrated strong performance. In contrast, elderly care and other services, property investment, and consumer finance struggled, indicating areas that require improvement. Management's outlook and strategy. overview the company's management has provided insight into its outlook and strategy through various statements in the financial summary. A key aspect of their approach is a long-term focus, as evident from their designation of investments in equity instruments as at FVTOCI, fair value through other comprehensive income, on page 30. This suggests that they are committed to investing in various financial instruments for sustained growth. Management also emphasizes the importance of optimizing debt and equity balance to maximize return to stakeholders, page 72. They review their capital structure regularly using gearing ratio to ensure funding requirements are met and liquidity is managed. Furthermore, they closely monitor and manage foreign exchange risk, page 74. Overall, management strategy appears to be centered around long-term growth, optimization of financial resources, and prudent risk management. The company has made several significant acquisitions and divestitures. Key acquisitions include HK $27.85 million in unlisted convertible bonds, HK $400, and $4.6 million in unlisted overseas equity securities, with a put right of 50% equity interest in Shanghai Yangyi City Renewal and Construction Development Co., Limited. For approximately RMB 893.7 million. Notable divestitures include unlisted overseas investment funds worth 40.1 HK million, other unlisted financial instruments worth 224.3 HK million. The company has indeed paid out dividends. Specifically, it distributed HK $40.4 million in dividends from listed investments in 2025 and HK $38 million in 2024. This indicates that the company has a history of paying dividends to its shareholders. There are concerns about potential issues with supply chain or inventory management, as mentioned in the financial summary. However, these concerns do not appear to be supported by the overall trend of sales and revenue growth, which suggests that the company is experiencing significant increases in demand for its products. Nevertheless, specific mentions on pages 11 and 20 hint at possible challenges related to inventory management, warranting further investigation. That concludes the financial summary for Allied Group. Feel free to comment below, and I will be happy to answer them when possible.